My name is Anthony Fatsis, and welcome to the What the Finance podcast, where we interview finance, trading, and investing experts to help you understand current market trends and learn about the intricacies of new and existing assets. If you enjoy the podcast and to help with the YouTube algorithm, please like, comment, and subscribe. It really helps with the podcast. That means we can continue to get amazing guests. Thanks again, and I hope you enjoy. George, thank you so much for joining the What the Finance podcast to talk with me today. So on to my first question. You mentioned before that you began your career at Scotiabank. I think it was during the housing crisis in 2008. That was sort of the professional finance career. You'd been doing trading before that. But can you explain sort of what that was like and maybe what lessons you learned from that experience?
Yeah, absolutely. So I basically got a co-op internship coming out of college. I finished in financial planning, and I had the opportunity to join the trading desk, which, like, to me by this point, this was my dream, right? So I'm super ecstatic about this opportunity. I show up day one, like really excited. I'm at my high here, euphoria. And I walk into this. At the time, I was on the customer service desk, right? So I'd get inquiries, and then if there's a trade, I'd actually send them to traders. I didn't get licensed till 2 years later as a trader myself, but dealing with the calls here, I walk in, my dream job with peak optimism, and I'm literally taking a phone call, and the first phone call would be like, hello, sir. Thank you for calling Scotia McLeod Direct Investing. That was the name of the company back then. And I'm Chipper, and he's like, yeah, it's great. And am I allowed to use choice words here if they fit the narrative? By the way,
Yeah,
Anthony?
that's fine. Yeah, you can.
Yeah, this is a quote. He's like, yeah, I'm happy you shitheads are happy. You guys are probably making a killing. I'm about to blow out my portfolio. I just got a margin call. So I look up his account, and he's got to sell his whole position. He doesn't have enough cash. Like, I have no cash to put towards my brokerage account. Just sell it all. Transfer to trader. He sells it. Another guy calls after that. I hang up. I'm like, geez, that's kind of sucks. Call another guy, or take another call. And the next person's like, how much do I have left in my account? I'm like, your margin call after you meet the margin call, you probably got about 10,000. He's like, perfect, enough to buy a tombstone. Like, it was really dark. Here I am at the highest of my career and step into one of the lowest type of atmospheres that you could be in. So it was literally back then, at the early stages of the crash before I joined Scotia, as I was still in school, people were just loading up. They were buying the dip, because on any crash on the way down, before you get to the panic territory, you're still optimistically adding to losing positions because it'll come back, right? It always does. And then comes the next stage where it's just outright like nobody wants to buy and everyone wants to get out. And that's the stage during which those calls were coming in dark. And so I did learn a lot of things. The passion for what I do, Anthony, started from there because I felt like I was taking these phone calls, and at the same time I have a blog that I was putting out saying, look, it's probably time to trim some of the position. This housing market's over leveraged. Some of these products are not really telling the truth, and nobody really listened. And so fast forward months later, market crash happening, and I'm like, man, I let these people down. I should have put this out a little bit more aggressively. And what really was the kicker here, Anthony, is that all these clients are getting blown out on their long positions, and the entire trading team is short. It's like, we take these phone calls, we're marging out clients, blowing out their account positions. Basically, they're left to next to nothing, a fraction of what they invested. Meanwhile, off the call, the team is celebrating that the market's dropping because they're all short. They're all riding the thing down. That kind of killed my buzz. That's how I started my career.
Wow, it's crazy. And I think that was similar in the US. Like, once they'd made massive losses, but then they try to cover themselves by, as you said, almost selling the crap to the retail investors and their clients. And then they were just putting themselves in position to not lose that much. So there's so many conflicts of interest during that time, weren't there?
And you know what? Only one person went to jail because of it. Like, when you watch a movie, The Big Short, it's very fun. It's like lighthearted, all these little explanations and like the bathtub of what a CDO is. It's meant to be a fun like movie, but behind all that is truth. It's like they did package these products. The people that were packaging them knew what they were doing, but the people selling them had no idea. You can't lose, and you can never lose until you do. And then, that it's a horrible place to be in your career, to realize the things that you trusted other people that you can't lose on are now generating losses with your hard-earned money. You know what I mean? Because these banks are losing profits they've already made. Yeah. We're losing money that we've worked for, especially in the early stages of your career. This is money you were an electrician for, like whatever your job is, you work hard to save that money. That's the worst money to lose. And oftentimes investors with that money don't come into the market until it's near the top. They like to see that it's gone up 400%. They're like, well, if I get another 400, I get to go to vacation and end up buying the top.
Yeah. And then you could say as well that these people, they were bailed out by the taxpayers basically. So they had all the rewards, the bankers, and then once it went the wrong way, then they were bailed out by the taxpayers. So basically there was like minimum, risk for them. And I guess you could say maybe Lehman and a few other places had higher risks. But yeah, but it was crazy when you look at it like that.
Yeah, it's like, you lost your money and then your taxes paid for the bailout of these companies. But get this, most of those bailouts were a profit. Years later, they collected those loans with interest. Do you think the taxpayer received any of that interest? Whose money was used? Absolutely not. It's mind-numbing. If you look at the story like GM, General Motors, they got I can't quote you the exact figure, but a ton of money, returned it with interest, and the taxpayer got nothing. What they got is higher taxes. That's how it works.
Yeah, it's crazy. And then I actually interviewed someone last week about Iceland, and they had a massive, one of the biggest crises during 2008. All their three largest banks went bankrupt. And he was saying like
Yeah.
a few people went to jail, but it was only for 6 months, or they got suspended sentences in the end after appeal. And then they had all their money offshore, and now they're bringing it in. So basically, they basically built a Ponzi scheme of debt that they couldn't pay back, and then everything collapsed, and it was all on the taxpayer. And then now they're rebuilding it, but really profiting from basically the fraud that they had, which is crazy.
And in Iceland, it wasn't always like that, right? That's a really cool case. It's not cool. Not somebody from Iceland wouldn't think cool is the right word, but it's an interesting case study because they weren't always like that. They bought into this Western ideal and system that they implemented, and at the worst time too. So that was actually a really sad story. And to be like, you'll say, oh, it's a financial crime, give them 6 months. There's nothing worse than stealing people's future of opportunity from their cash that they work hard for. You know how hard the average person works to, number one, just get by, and if they're lucky to have some money to save. You know what I mean? We forget how lucky we are if we have savings. If you have savings, you're like the top 1% of the world right now, any kind of savings. So, it was a dark time, man, honestly. And I started my career right at the depths of all of it. So, unfortunately, I kind of lived through the clients as well.
Yeah. And is that what sort of gave you the influence to change careers? Because obviously now you're focusing on educating people more rather than in that institutional place.
Yeah. So at that point, I was like, look, if I become a trader and I get licensed, because that was always my goal from day one. I want to work for an institution as a licensed trader. I didn't want to go to Chicago because, my family's all in Canada and I didn't want to go there and leave everybody. I'm a family guy. I need to be close to my family to re-energize, or else I get in trouble. I've learned that in my teenage years. If I stray too far, bad things happen. So I didn't want to go to Chicago. And I'm like, look, the next best thing is to work here in Canada on the trading desk. So my goal is to get licensed. So I ended up getting licensed. I was on the trading desk taking trades for clients for a few years. And then I moved into a sales capacity. Really, like, the turning point of my career is when I realized being a professional trader means you're not trading for yourself. Like, when you become a true professional trader, like, that means that you're not making your own money. You're making it off of moving other people's money. That's what it means to be a professional. It doesn't mean that you're successful or not. It just means that you're, professionally doing it. So it means you're managing other people's money. And once I realized that if I was to get into that capacity higher up and to go into, like, trading money, proprietarily for a company, once I realized that, it's like, I can't do my own trades. Like, if I'm in a capacity to be a professional trader, there's compliance review of your statements. There's certain things you can't do. You go last in the order book for any stocks that you buy because you're considered a pro. Your data fees are much more expensive. It's like, man, this is not what I thought it was. And remember, this is 2009. There wasn't the kind of kids these days will say, listen to this podcast, why don't you just Google it before you made a career choice, bro? And it's like, there wasn't the internet back then like that, bro. There was nothing to Google. It's like you kind of had to go in, trust, and find out for yourself what it would be like. And to me, that was a shocker. I had an opportunity to join the futures trading desk at Scotia, and I realized, that's going to actually hamper my own trades. And above everything else, I've always valued the opportunity to trade for myself. That's always been like paramount in who I am. The goal was always to be here, to be a trader full time for myself.
Yeah, and I guess at that time as well, I'm not sure if it was the same in Canada, but the Volcker law came in the US, so all the prop firms inside the banks shut down. So basically, you were just, these traders were market makers then.
Yeah, exactly. That shut down the prop arms of a lot of these banks, and that dried up overnight. And the heyday of proprietary trading, as we know it, was over, right, from the bank side.
Yeah, and we've seen a lot of they're saying they're sort of blaming that for a lot of the talent going to doing similar to what you're doing, where you're trading your own money, because just the potential profit available doing that is so much higher than working at the bank. And the lifestyle as well is a lot better than working 80, 90, 100 hours a week busting your gut for good money, but it's nothing compared to what you could do if you were doing it yourself.
Yeah, for sure. And I think the hard part for people is it's letting go of these societal norms, right? Because working for yourself might be the end goal, but before you ever get to work for yourself, you're going to have to make the decision to ditch these societal norms. You're going to have to make the decision to quit a full-time opportunity that will give you a decent career and a great retirement, but you might not be happy while you're doing it. And I wasn't personally happy. And so before making the decision to be full-time trader, full-time entrepreneur, because it's really the same thing, got to make the decision to cut away from the system. And it was a hard one for me. I'm European. My parents are always like, get a job. My parents came from communism, to them, a job opportunity that's stable and pays you regularly for a bank that won't go out of business. That's like the be all and end all. In my early 20s, I should have retired basically and just worked that job my whole life. So yeah, it's a tough decision, honestly. And as a trader, you could make a lot of money, but the reason a lot of the guys back then, like the prop firms, is the access to the information and the environment, right? It's one thing to be in a firm where you have 30 other guys trading around you and you could have conversation. It's more like a team sport. And then you go home to your basement and you're trading in a bedroom by yourself. Your decision making is extremely hampered. So really, this is what we try to do with my mission and purpose here, is to create an environment like a prop firm, but from home. Because trading alone is quite possibly the worst thing you can do. I got a story for you really quickly if you want.
Yeah.
On trading alone. I'm leaving my job. This is 2016. I told my boss I'm out. He wasn't surprised. He's like, "You've been out for 9 months." He's like, "You haven't been as committed for the past 9 months." So I leave. It's 2016 in September. I started trading by home by myself. And I had the vision of this is my life's work, my dream. I'm going to be trading from home for myself. And I get there and the first 3 weeks felt fine. And then it was downhill. It just sucked. You're doing good. You're making money. You're not talking to anyone. You're trapped in your home. You know what I mean? There's no separation from a work-life balance, kind of like now with COVID, really. And man, it was I got to the point I was doing a shot at 9:25 before the opening bell, and then 2, and then 3. I'm like, this is going to be a problem. You know what I mean? This is working towards a big problem. So I had to slow it down, create a group of people. I couldn't trade alone. I don't think anyone actually should, to be honest with you.
Yeah, well, that's something that I've heard so much. The people who are successful, they have a group, a community that they're sort of, even if it's just bouncing ideas again off people, and you might not agree with them, but it's just good to hear other people's opinion, because you can, and it's the same with trading. You can almost get stuck in this, this sort of theory of a certain trade or a certain market move. But if someone else might have a different opinion, that will change your perspective on it, or different data.
Yeah, exactly. That's what the value of the community is. It isn't to copy each other's trades. It's to be like, if I'm looking to get long the S&P 500 and, one of the bond traders in the room says, "Oh, I'm looking to get long the bonds." Well, they don't both go up. They're inversely correlated. So I'd ask them, what do you know? What are you basing your long bond trade off? Maybe you could save me a losing long trade. So it's really that collaboration and free flow of information that makes it attractive. At the end of the day, you might look at trading, for the listener, as something that there's no overhead, there's no staff costs, there's no business incorporation costs, there's no, there's nothing. It's the ultimate business. No people to answer to, no people to sell to. You're just sitting there trading in the bedroom by yourself. And yeah, part of that is true. But think about this. If you're not trading with people in a community, how are you going to trade against people? Getting into a trade isn't this, video game experience. Getting into a trade means if you're buying a stock, you're lifting the offer of somebody sitting on the sell side. You got to be matched to somebody to execute a trade. So really, there's a lot more human element to it than most traders think. It's not a video game. You're actually exchanging value with another human. And part of that human experience is how you understand valuation and get your edge in trading, really.
Yeah, and that's super interesting. As you said, like with how liquid some of the markets are, it can be easy to think that, you market buy, it just feels straight away and, you get the price that they say. But as you said, it's someone wins, someone loses. And that's basically
Always.
how it works.
Yeah, exactly. And if you can't know what level somebody's winning or losing at, or if you can't visualize where humans are in a position or going to get out, you're not really going to see the market to its full potential. Like if you start looking at trading as an exercise of psychology, not an exercise of knowledge, like a whole new world opens up to you. Like, I mean, you got the control on this, Anthony, but that would be a quotable right there.
Yeah.
Right? Like really psychology is what makes the market. That's why it moves. It doesn't move for arbitrary reasons. It moves because there are humans who get emotional and either have to buy or sell. And the more emotional they get, the faster the move is going to be. So breaking this down from a psychological component, looking at it through the lens of human psychology, gives you such a big edge in the marketplace. It's actually, ridiculous. It's so simple, but so effective.
Yeah, but I guess it's hard though, because people aren't simple, are they? People are quite complex. Even though you see like the same, you've probably experienced, you see the same things happen over and over again with with the crashes. You saw it in 2008 personally. 2020 you probably saw similarities between that as well. So how would you recommend someone like learn the human psychology to become a better trader?
It's a great question. And I think what you mentioned there, Anthony, I think complexity is a mask for a lack of confidence, right? I think if we're not confident in our ability, like we're trading, but we don't really believe we're going to do well. And what I mean by that is you've done the work, you spent hundreds of hours, let's not say hundreds, but 30, 40, 50 hours of studying, and you're trading with live capital, but deep down in your subconscious, you don't really believe that this is going to work because your mom said that working for yourself is a disaster waiting to happen because your mom or dad or your family, your friend, your brother said this is a risky business. So we take these subconscious beliefs, we suppress them and try to work through it logically. So now complexity comes into the picture because the more complicated I could make this system, the smarter I will feel. And so you're giving yourself a level of confidence by complicating things. When I see people trading a chart with like 60 indicators, I love to ask them, where's the price chart? Like, where can I see the chart of the price? Like, oh yeah, it's up here. It's that little quadrant there. That's my price chart. So it's like, take all that stuff off. So for somebody who wants to start, and learn psychology to answer your question in the marketplace, psychology is twofold. Number one, you have to know performance psychology. And so performance psychology is your mindset. How will I thrive in the face of, my strategy not working? On the tough days, how will I bounce back? On the really great days, how will I remind myself that I'm not above the market? How will I stay humble? So it's kind of like one part becoming an athlete. So I read a lot of sports psychology stuff. It helps me in trading more than anything in this whole world. Like I haven't read a trading book in over a decade and a half because frankly, you're not going to learn how to trade from a book, right? So I read performance psychology for like, athletics, being an athlete, just like that really, really like mindset stuff that everyone calls cheesy that I love. Second part of psychology is mapping it out. So you have psychology of you as the operator, but you also have cycles of emotion and psychology on the chart. And so when you're looking at a price chart, you are looking at psychology, all right? Have a look at the market that rallies 30 points or $30, whatever stock it is, and it's up $30. And all of a sudden it drops, 15 out of nowhere. It drops way faster than it went up. You ask yourself, oh, that must be somebody, like an institution screwing us. It's not. It's the person who $30 lower didn't want to buy, who is now convinced that $30 higher is a good opportunity because they could see it. It's like, I've seen it move $30. It's going to go $30 more. I'm going to buy a cottage, I'm going to get a boat. They put the order, they buy, and that's the top, and it drops. So looking at a price chart, you are actually looking at psychology, but rather than looking to put indicators to measure, irrelevant things, you should start looking at the price chart and ask yourself, all right, the stock went up. What does that mean? How many people are long? If I was short, would I still be short here? If I wasn't short, would I short it? All right. And when you start asking questions like that, you really start to narrow down on why the market moves. At the end of the day, the market moves because there are traders that are stuck that need to get out of their position. They're willing to pay for it at a loss.
Yeah, definitely. And that's something that I've really sort of learned, during my training career, it's having that plan and actually doing quite a lot of research before you get into a trade. Sometimes it's so easy, like, oh, the price is going up. As you said, the price goes up, I'm going to buy. Oh shit, it's gone down, I'm going to sell. Like, people don't put that much thought into it. But as you said, you need to put quite a lot of thought into each of these trades before actually, and more experience you get, probably the less thought, you becomes a bit easier with it to do it.
Yeah. And not even just the thought into the trades, like thought into like, what am I actually doing? Right? Like, how many people actually think that? It's like, that's an important question to ask yourself before you, in any part of life. You go out to party one night, and if you don't ask yourself, what am I actually doing? You could end up in jail or worse. So, but we don't do that trading because it's cute, it's fun, it's a video game until you blow out your account. Your eyes are grapefruit size, and you're like, should consider that. So let me explain one thing that I think people would benefit from. When I saw this aspect to the market, things changed for me. Like, it's just game changers. So yeah, number one is, what do we do? When do we buy? We buy when things are going up, right? Well, think about that for a second. Why do things go up? There are more people willing to pay a higher price for it. So they're chasing the market. So as you're buying when prices are going up, the beginning trader will say, well, it's not up enough. You know what? I want to buy it. I have a feeling, got a hunch. All my analysis tell me I should buy it right now, but I'm going to wait. Then it goes up $20. And you're like, I knew I should have bought, right? And then you're like, you know what? It's gone $20. There could be 20 more. I'm going to buy now. And you buy now. But what you don't understand is, from the 0 point of that move to the plus 20 that you could have got, along that run up into the chart, people have bought it. You may not have, but people have bought it. So let me tell you this. If, let's say there's $100 million of cash in brokerage accounts in the United States, it's probably more, but let's just make a crazy assumption here, 100 million cash. And let's assume we're all trading Apple, and Apple's $30. And by the time you decide to buy it, $98 million of the available cash balance has been invested in Apple. Okay, this is a grotesque oversimplification of the market, but let's go with this analogy here. And then you decide to buy it. Just think about what you did. You were the last to buy. There's $98 million of the cash that's invested in this. And yeah, it might go up a bit because there's 2 million to buy. But what happened in the precise moment that all the money that was available for purchase has been bought? The chart looks fantastic. It's up huge, up $40. It's making the news. Volume's exploding. Everyone's high-fiving each other. If all the money has been spent for the long, what is going to be the next dollar to move it higher? There is no money. Once everybody's euphoric, everyone's already bought. Once everyone has bought, how do they get out of their trade? They sell. So really, we're looking at the market the wrong way. It's like, it's going up. It's amazing. I'm going to buy it at the top. But when there's that many buyers, they're all actually motivated sellers. As the price drops, they get motivated faster to get out and liquidate. So this is the dynamic of psychology I was talking about, is that the more buying there is, sure, it's aggressive, it's great, but there's less cash left for even more buying. And the stock price that you see on your chart now is a reflection of who's already bought, but also how much more availability of capital is there to continue buying. Everything runs out. And typically, by the time a retail trader gets motivated to buy, it's right after everyone's already gotten in, because at that point, they don't have to think if it's going to go up. They see it. You know what I mean, Anthony? It's like, I see a $30 move. It's working. And then they buy it towards the tail end when everyone's becoming a seller.
Yeah.
Like when I saw it.
Oh, sorry.
Yeah. No, sorry about that. I was saying, when I saw it like that, like my mind, it took me a long time to get to that level where I saw the market like that. But it flips. Everything we've been taught about how we should trade is the exact opposite.
Yeah, definitely. And to buy the stock, you need a seller. So if there's no one selling it, then, that's where that exuberance comes. And even though it's going up, there might not be, there's hardly any liquidity in the stock. So it's really easy for the price to go back down quite quickly.
Exactly. If it's going up on low volume, that doesn't mean there's a lot of buying. It just means there's no sellers. And so buyers are willing to pay more. This is why it's going up, but the volume is low. Like, the volume is the gas pedal to the car. If you look at any chart, and you're looking at price going up, but the volume is not following, like, price is up, volume bar is down, you're seeing a car moving forward, but the gas pedal is being let off. And what happens when you let off the gas pedal? Doesn't mean it's going to crash. It's going to coast to a stop. And then unless you hit the gas pedal, down we go. It's like driving up a hill.
Yeah, everyone puts the brakes on, put the handbrake on, basically. And then,
Yeah, exactly.
yeah, it's going, stop him real quick.
Yeah, exactly.
So you mentioned human psychology there. Are there any books, obviously high performance sports psychology, any books that you'd recommend people maybe read if they're looking to get into it, or maybe ones that you've found really useful?
Yeah. It really depends on what stage of the journey you're at, because I don't really think there's a book for everyone. And I'm not one of these people, Anthony, I promise, that like you ask a question and I kind of always say, well, that's not the right question.
Yeah.
I love to agree with people and see stuff, but just for the listener, I think I'll list some books, not a problem, but I think you got to kind of stop and reflect. Like, what do I need right now to make myself better? Because there isn't one book that'll help everyone, because everyone's at a different point of their journey. But if you've never done any personal development before, if you thought like, personal development in itself is for weak people. Like, I don't need to develop. I'm as great as I'm going to be. You need to start at the very beginning of the journey. And the very beginning of the journey is understanding how your subconscious mind works. So Joseph Murray, The Power of the Subconscious Mind, is a fantastic book. Now, a little precursor there. There's some religion involved in it. And, I don't know how you feel about it as a listener, but if you look past it, if you're against it, or if you embrace it, if you're with that stuff, it strengthens the narrative of the book. It explains to you why your subconscious mind makes you do the things that you do. You ever had a trading day, Anthony, where you're like, I'm going to trade differently today, and at the end of the day, you didn't, and you lost some money, and you look at this, and you're like, who the hell was trading for me? I didn't do this. I don't feel like I did it. My plan was different. When the emotion dies down, you look at it, you're like, wow, who traded this? It almost feel like it wasn't me. Have you ever had those days?
Yeah, or you like go, you're like, I'm going to follow this plan. I'm not going to do what I normally do, and then you do what you normally do.
And you do it again, and now it
Yeah,
becomes a
literally.
habit.
Yeah, and you're like, no, I'm definitely not going to do it. And yeah, as you said, it becomes a habit. The subconscious mind.
Yeah, this time for real. I promise. I promise this
Yeah.
time. Yeah. And look, I only laugh at this, Anthony, because I've been there, bro. Like,
Yeah.
I'm not telling people I wasn't born a good trader. I don't even see myself as a good trader. I see myself as an average trader that always needs to work on myself. This is after 20 years of being in the game. The moment I see myself as a successful, great trader, it's over. I got to do something different. I'm going to get chewed alive out there. But the reason I asked you that question of like, have you ever experienced that, is because there are times where most investors in their journey have yet to meet one person that started with the account that they thought they were going to have and made millions. It always goes the exact opposite of how you expect. So, when you have that feeling, who traded? It wasn't me. You know who it was? It was your subconscious mind. It was you. It's the operator behind what we call the conscious brain, because we approach the markets with the understanding that it's a logical, rational information business, right?
Mm.
But really behind that, here's a fact. So I was trained and certified in neuro-linguistic programming. That made a difference in not just my trading, but my entire life, the way I just view life in general. I strongly recommend you guys check out at least some of the techniques. It's kind of a user manual for your brain. But in NLP, I learned 99.996% of your brain processing is done at the subconscious level. All right. So let me give you an example. So you're saying, okay, I have a new plan. I worked 4 hours last night. I got a new plan. So that means you've created your plan with a 0.04% capacity. Think about that for a second. No matter how many hours you spent, multiply it by 0.04%. That's the tangible benefit you've made to your mind as a whole. All right. So what is the 99.96%? What is the subconscious factor? That part is so much harder to work with, and it's so easy to ignore, because now we have to view ourselves as not perfect. We have to view ourselves as, people who need to improve. We have to be responsible to make those changes. Let me give you an example of why that happens, Anthony. This might actually blow your mind. You got a mop handy?
Yeah. I'm ready.
There might be a cleanup on aisle one.
My buddy's prepared.
Perfect. Oh, you got company there. Great. Get a mop, a big one, please. So get this. Those days happen for this reason. Okay. Let's assume that we carry a predisposition in our psychology to, aversion to loss. If you do the math, our parents were children to people who lived through the Great Depression, right? So our like great grandfathers and grandmothers have severe loss aversion because, hey, they lived in a different time. You think COVID was bad? Imagine having to go to war to get your head taken off. Like, it's different times. that they experience. So they pass those values down to our parents. Now, our parents aren't ultra risk. They're like, if it's good for you, honey, you go for it, whatever. Whoever the people in our life was that influenced us at a young age, they, just try it. But deep down, they knew what their parents taught. Your son is taking risk. Don't watch out. And so they pass down values to us, the generation where, we have the right to seek happiness, but we should still comply. We should still not take risk. All right. We should not expect for us to be successful without working for somebody. These kind of values, the human mind learns its values from 0 to 7. Now, this is a mind-blowing fact on its own. From 0 to 7, you learn everything that we call your value system. The value system from 7 years old till the day that you die is a railway. It stays on that track. If you have values of a lack mindset, you're going to be a lack mindset individual on the day that you die, unless you change the course of that track. And that's what I'm talking about on psychology. So in trading, here's what happens. You walk into trading, you have fear. You're scared to death of trading, but everyone on Twitter is doing good. So you're going to try it. And that risk is bad. You're afraid. You don't have much money to lose. You haven't been trained how to deal with risk and loss. Last time you lost, you put up a shell and you've never really overcame that thing in your life. Now you come to trading and you're like, okay, I'm going to learn. Logically, my 0.04% of my mind is going to overcome the market. And so you learn. You spend 6 months in sim, 2 months in sim, and you're killing it on sim. Why? Because you could tell yourself, I'm trading the sim money like real money. I'm treating it like real money. Famous last words in trading. I'm treating this money like real money. But subconsciously, 99.96% of your brain says, yeah, you treat it all you want with your 0.04. I know nothing's on the line. I don't need to protect you. You go play your video game and you go live. Suddenly things change on a dime. From the moment you switch from sim to live, your heart rate increases. All right. Your heart rate starts to pump faster blood. Your adrenaline increases. Cortisol increases. Cortisol starts to trigger, my subconscious needs to protect me. So you're in a trade logically thinking of what you're going to do with your plan, but your subconscious mind kicks in and says, hey, what you're doing is risky. What are you doing? Your mom taught you 0 to 7 years old. You shouldn't risk anything. You believe in safety. This isn't safe. What you're doing is going to get you in trouble. So you're logically fighting against the guy behind you in your mind, pulling the levers. So what do? You take a trade, you lose the money. Now your cortisol increases even more. Your loss program starts to trigger. You start to freak out and you keep losing money and you're fighting 99.96% with a 0.04% of your mind. You're always going to lose. At the end of the day, do you know why blowing out your account is actually success for your subconscious mind? Because the faster you blow it out, the faster you stop taking risk. See, when I learned that, to me, that blew my mind, because losing money to us logically is upsetting, but losing money to your subconscious mind is a win, because you no longer have the capacity to take any more risk and override the programs you spent decades, if you're 20, writing into your brain. And so this is why traders fail ultimately. It's because they train the logic, but never train the subconscious that really makes the difference between whether you're going to succeed or fail in anything. Trading is not unique. You just have to train your mind to be a success machine, and you're going to succeed in anything in life. Best part is you become a good trader, become a better human, your relationships improve. It's crazy. The smallest benefit of reap from trading is the money.
Yeah.
The other things have always been, so I don't know if you're going to need to use the mop or not, but understanding that you could see why it's hard for a new trader coming into this business.
Yeah, definitely. I think that's a great way to look at it. And I think the craziest thing that I've found is that, it's not short term. So, we're talking now, it's like, one day you blow your account, but no, that's not the issue. It's like you follow this plan for a week, 2 weeks, a month, a few months, you're doing pretty well, you're making profit. And then you go, okay, I'm just going to, increase my stop loss a little bit, go from 1% to 2%. I'm just going to make these small changes. And then that's when, once you break those rules, and it becomes, you continue to break them. And that's, as you said, that's almost your subconscious mind taking over.
Exactly. Right. And the more you're trading now, the risk is bigger too. So you're triggering that program to try to save you at a greater severity of a level. Right. And as traders, deciding to increase our loss from 1% to 2% on paper Simple decision. I just want to make more money, so I'll just have to increase my risk, increase my take profit, or I'll just size up my position quantity. No problem. It makes sense. But are you prepared? Have you earned the right to trade that bigger size you're trying to trade? Right? That's the thing. You need to earn the right to trade bigger. That's one of the big lessons I learned, in my career as a trader for Scotiabank, is that this position quantity is relative on your experience level, and how long you've developed your skill plus your mindset. It is not about how much money you want to make. Most people say, oh, it's on 5Gs this month. It'd be great if it was 50. All right. So 50 divided by 5, that's 10. I 10x my position size. I should get all my dreams to come true. And then you realize that, the psychology you're coming with is down here and you might be profiting here. But the moment you increase your leverage and your psychology or success mindset hasn't increased at least equally, now you watch racing by any chance?
Not that much, no, but I do watch F1 sometimes, but I'm not a massive fan.
Oh, I love F1. So it's like F1. Everyone, they dream of being in Lewis Hamilton's car because he's champion right now. And maybe Max Verstappen, he's coming up. It's like, okay, great. You want to go fast? If you get Lewis Hamilton's car, you're not even going to be able to turn it on. You're going to stall it coming off like the garage. It's a complicated machine. This is what we're trying to do. We're trying to operate a complicated machine, never working on the operator. You know what I mean? Look at Google searches. Lewis Hamilton's car, 0 to 60. It's a shocking fact. They go, I think, 0 to 100 or 0 to 60 miles and back to 0 in like 2.3 seconds. Something ridiculous like that. You're like, wow, it's so cool. You research the machine. Nobody Googles what kind of stuff does Lewis Hamilton do before his race. How has Lewis Hamilton worked on his mindset? Nobody cares about that. That's not exciting. That's how you get slaughtered in trading. The fastest way to lose all your money is to increase your size without increasing your personal development. Easiest formula to blow out.
It's too results driven rather than process driven.
Exactly. Man, I have a sticky on my monitor right here. It says process over profits.
Yeah.
And even 20 years after being in the game, Anthony, it's like I hit these days where I have money losing habits, but the difference isn't that I'm not having these challenges. The difference is I'm recognizing them and working through them. And every single time I'm having a rough day, look at that damn sticky and I ask myself, am I trading for process or profits? So I just have process greater than profits. And you know what? I can't tell you a single day where I've done extremely bad that I was trading the process. I was always going for the money. Ironically enough, that's what I didn't get.
Yeah, it's crazy, isn't it? The more you want something, the less you get it often, isn't it?
Yeah. It's like, because it's just an obsession with it, with the profit. The profit is a score, and this goes back to the analogy of being an athlete. Have you ever seen a sport where, like, let's take it to hockey. I also play hockey. I don't know if you guys watch hockey or whatever sport, but you ever seen an athlete, like the puck comes to their stick, he's winding up for the shot, and then stop and look at the scoreboard? Like, oh, I wonder how much ice do I have? Have I been on the ice for more than 2 minutes? No, you take the damn shot. Think about that stuff later. It's the same thing with trading. The number that we're at is the scoreboard. If you're in the game, quit looking at the scoreboard. Focus on the game. Make the play first. And I actually have a rule, Anthony. The moment of the day where I look, when I wonder, hey, how much am I up? How much am I down? How many contracts have I traded? If I look at the number, the P&L for the day, I immediately have to cut half size for the whole session. Half size. I can't trade bigger than half than I was up to that point. Clearly, it's a sign of distraction. If I want to be a fan, shut down the account, go to the stands and watch the game. But as an athlete, as a trader, this is what you are. You're an athletic mindset. You're creating the score. Don't look at that scoreboard. Useless.
Yeah, well, I think that's a really great way to look at it. So I'm going to go more onto the sort of the macro economics of the markets at the moment. It is quite an interesting time. So you could say that monetary policy it's very open. It's obviously very lots of money being pumped into the system. And I don't know if you've heard Ray Dalio. He sort of talked about, he thinks we're coming to the end of like a credit cycle or debt cycle. So he believes that it's going to get to the point where if we have a crash, debt's going to dry up or credit's going to dry up. These companies aren't going to be able to extend their bonds, raise more money. So there's going to be a lot of bankruptcies. Do you see that as a potential risk, or what are you seeing? What do you think will happen with the current market?
Ray Dalio can't decide if he wants to be an asset management or an entertainment figure. Like
Yeah.
he's, I love that he's a genius. That man is smart. Don't get me wrong. I love his books, but like, like to be honest with you, where the economy is at the moment, it's historic. Like Ray Dalio has a book called The Big Debt Crisis. And it's actually a collection of past case studies. I don't know if you've ever got a chance to get your hands on one of those, Anthony. Whether you like the guy or not, highly recommended read, because history doesn't repeat itself, but it rhymes. And so if you look at where we are at the moment in an economic cycle, like one thing you need to understand is the markets are here, the economy is here. And this separation happened in, guess when? 2009. When the Federal Reserve, then chaired by Ben Bernanke, decided to release TARP 1, Troubled Asset Relief Program. And so, that made sense. That's a good move. Market's down 50%. You're probably going to want to do something about it as the Fed. But why they're still in it to this day is perplexing. Do you know what I mean? It's like going to a party and getting a little bit of a buzz, not being completely drunk. And then, clearly you're having fun at 2 a.m. But what happens in the next morning of a party? You got to recuperate, drink some water. You know what I mean? But this is like a party that started in 2009, and every hour on the hour since 2 a.m., you've been taking a little shot. Like we've been on like a, 12-year buzz right now. Yeah. And so clearly things are going well. Like the Federal Reserve printing this money is the reason that we're here, that stock markets are so high, but the economy isn't doing that great. And when I started trading, I didn't ever anticipate there'd be a time where analyzing the stock market and analyzing economic performance would be two completely different crafts. Like the stock market is disconnected from the economy. You look at the average person, they're not doing as great as they were. It's been stagflation. It's been right at where we're at for the last couple of years. They haven't really benefited. Incomes haven't really gone up that much. Expenses have. I don't know if you checked oil. Look at it. All right. Food costs have gone up. Nobody's willing to work anymore. There's labor shortages, and so it's a level where if you look at it logically and rationally, S&P should be trading 2,000 points lower, easy. All right. But there's a Federal Reserve, and they've made it clear they're here to print as much money. The problem with this is money in a fiat form is only as good as long as there's trust in it, right? If you trust the dollar, great, it's going to keep going. But with a debt-driven society, and Ray Dalio said this, he's written in his book, a debt-driven society requires only one thing, and it's growth. And the problem with what's happened is the Fed's got to keep printing money to generate more growth. We haven't had a lot of organic growth for a very long time because look at all the companies we celebrate. What do we celebrate? Facebook, Apple, Amazon, Google, and Microsoft, the top 5 tech stocks make up 20% of a large cap index like the S&P. We celebrate those stocks, but those stocks are single-handedly killing jobs. This is what's driving that lack of, growth. And so, we're at a very interesting time, Anthony. My economics, I used to be interested in economics, so I realized it's completely useless for trading. And since 2009, that's where Ben Bernanke is at. So do I agree with Ray Dalio? Yes. I think this is a debt-driven credit system at the moment. Will it end? It always ends, Anthony. It always ends. And it always ends when the party is at its height. And so it will end. But am I going to put my entire life savings trying to call a top? No, I don't want it to end. I don't want to see people get hurt. Will I be okay? Yes, probably. But I don't want to see it happen. So just the fact that the system will end at some point, it might not be now. We might have another 300% rally in the S&P. Who knows? I don't call tops.
Yeah, well, that's what they say, isn't it? That the market can go up higher longer than you can stay solvent, and you can. I think that's
love that quote.
Yeah, and it's true. It's as you said, not trying to pick the tops, but just following. So would you say you're more of a day trader then?
Yeah. So at a TradePro, I'm more of a day trader of futures. And Victorio, who runs more of the options and stocks trading, day trades options, but then we'll have some running positions as well in the market. I predominantly day trade. I take the cash flow and I invest in other things outside of the markets. I like to create a nest egg. I think my biggest nightmare is one morning waking up and realizing all my wealth is in stocks. I don't know how I'd be able to sleep, to be perfectly honest with you. And not because it's not the right thing for anyone. It's because I remember 2009. Do you know what I mean? I was there. I started trading in 2001, right as the tech bubble burst. Look, I started trading as the market crashed 40%. And then I got my dream job in the market as it crashed another 50. Like,
Yeah.
I know those times. I know how much they suck. So I day trade mostly. To me, I trade 2 hours a day. I start at 9:30 until 11. So about an hour and a half, but 30 minutes prep work. And I start with cash, hopefully finish with more cash. Not every day. No one always wins. And then the next day I do it again because it removes having to be right. It removes the need to know where it's going to go in the next 2 weeks, 3 weeks, a month. I don't really care. I can't even tell you with certainty where it's going to go in 10 seconds. But there is ways to assess probability and to get into those positions. That's why I like day trading. Good leverage, good size. No need to worry overnight, and every single day there's opportunity. And you're not really, when you start the day, you don't need the market to go up to do well. Like, when you wake up in the morning, if you have a portfolio, you're like, oh God, I hope it goes up. And then you go to work. You don't get that with day trading.
Yeah, definitely. Same with owning any asset, crypto or anything, like, you wake up in the middle of the night looking at the if it's gone up or not. But yeah, as you said, with day trading, you can switch off and then do the rest of the stuff.
I have a friend that kills it in crypto, and I'm like, hey man, like how many times do you check it? And he's like, I wake up 4 times a night. And I'm like, just like,
Yeah.
like actually wake up? I was taken aback. He's like, no, I don't want to wake up 4 times. I have an alarm clock set. I'm like, do you think at some point what you're doing is unhealthy? I'm like, how much money do you want to make to give up, like, quality of your life? Like there's a balance, right? There's everyone who thinks they're going to make millions of dollars and sit on the beach sipping mojitos. You got to turn on those or turn off those Instagram ads. That ain't going to happen. Yeah. Like, you want to make big money, you're taking big risk, and it's never going to become easier. You just get better at doing it. So yeah, man, I mean, I love crypto, but like that idea of it just spooks me. I'm okay not making the kind of money that some people are motivated by online. I do well. And, you got to find what works for you. Plus, I'm getting older, Anthony. I just had a kid. I'm a father. My life's changed. I'm just like re-looking at life in a completely different way.
Yeah, I think it's a great way to look at it. And as you said, the only people who are making those massive returns are the 0.01%. People who got in early or some lucky people. It's not the normal thing.
Can I tell you something, Anthony? I don't think anyone's making those kind of returns. I think the person on Twitter that we follow, that could be wrong. You know what I mean? Somebody's going to inevitably message me like, I make more than you. And I'm going to say, that's fantastic. Yeah. But like, those people that have these big wins, and not all of them, but they're not showing the full side of it. I'm not impressed that you made $1 million in a day if you lost 1.2 yesterday. In fact, that scares me, not just me, but for you in your life too. So it's like, one of the most healthy things you could do in today's society is turn social media off. There's nothing social about it. Believe me. Like, imagine being surrounded by friends who would just buy a new pair of shoes. Like, look at my shoes. What are you wearing? Those suck. And then the next day come in, look at my hoodie. Look at this hoodie, Louis Vuitton Supreme combo. But that's the people we follow online. It's not the people we'd hang with. It's the people we follow. That stuff is rotting your brain. How did the world's most antisocial kid create the biggest social media company, Facebook? You know what I mean? Have you seen the movie?
Yeah.
There's this thing on Netflix called Social Dilemma. Have you ever watched that documentary?
No, I haven't.
Mind blowing. At the very end, they ask these executives of social media, do you let your children watch social media or be on social media? Like, don't quote me on this, but the majority of them, I think there's only one guy that said, yeah, why not? The other ones are like, their tone changed. They're like, no, we have a strict social media policy at home. Other ones like, not at all. Absolutely not. The executives of these companies don't want their kids using the product. Think about what it's doing to our brain. And I know this isn't on topic at all, but if you want to be a great trader, ditch that social media. It's honestly rotting our brains. And I don't know if I've ever come out with a strong stance like that before, but I've just seen some things in the last couple of days that have kind of upset me. Not about me, but some of our members, like, it just makes you feel like you're not good enough. Do you know what I mean? No matter what you got, you're not good enough. And then we look at these moments in life where, some girl on Instagram posts a picture. I ran into a girl in Bali. I know I'm giving you super long-winded questions, but told you I talk a lot. Ran into a girl in Bali in 2016 when I quit Scotiabank to be a trader for myself. And she's like, I'm a social media influencer. I'm like, well, we're using influencer a little bit lightly here, but okay, go on. And she says, and put a picture up and I promote products. I'm like, okay, now do you think your users think that this is your life? And she's like, yeah. I'm like, okay, how many pictures did you take to post that one today? She's like 2,400 and something, like over 2,000. And I'm like, and how long did it take you to edit it? She's like 6 hours. Like, do you think there's anything wrong with that? That you're portraying this one snapshot moment of your life that you never even lived to be your everyday life? You know what I mean? And I think these are the things striving people to become worse traders. And even if you make a ton of money, you know, when you're broke and don't have money, it's easy to imagine how it'll make you happy. But what happens when you do have the money and you're still not happy? You know what I mean? Because I know about that too.
Yeah. Yeah, I think that's a great
I digress.
insight. No, that's all right. That's all right. I think that was a great piece of advice. And I agree. I know I spend too much time on it, and I'm sure my girlfriend agrees with that. So, so George,
and look, man, maybe you're using it right. Maybe you're using it for motivation. I'm not like, you know, shitting on the whole social media space, but we got to protect our time, bro. We have 86,400 seconds. And if I gave you that money, everyone would have an answer for how they'd spend it, but no one's thought about how they're going to spend their time the same way. You know, that's all I was trying to highlight.
No, definitely. I completely agree. So, George, thank you so much for joining the What the Finance podcast today. On to my last question. What is one message you'd like our listeners to take away from the interview?
Look, I think what we're trying to do as a whole in investing, it's changed. I think for the first time ever, retail traders are actually empowered. I think retail traders matter. I think the retail traders are beating the institutions at their own game in certain examples. I mean, you look at GameStop, look at AMC, you know, but the one piece of advice that I'll give you is, you know, when you're at the peak, when you're at the height, when trading feels easy, when you're looking at boats and cottages, just take it down a notch and always realize that, you know, what you're doing is great. It's a career choice, but always take it down a notch and get back to a more humble stance. And as you grow your trading account, my one piece of advice for any new trader is never, ever, ever forget to grow your mindset too. Because there's something called the Peter Principle, 2 ways to fire somebody: fire them and pay the severance, or promote them and let them screw themselves over. You know, like, don't let that happen in trading. It's easy. I've been there. Trust me, guys. I've been through this. I've been to the point where like things scaled up. They went great. I took too much of the success as I'm just a smart dude, and I was humbled out real quick. So always remember that before you grow your trade balance, or you try to size up in your trading, or you try to start chasing profit, focus on the process. Focus on yourself as an operator just as much as you're focusing on your strategy. Because I'm seeing people out there trying to skip that process of working on themselves and going to signal services, going to Discord groups, and asking the most important question: what stock should I buy? If you can't answer that, you shouldn't be investing your money. You know what I mean? This isn't about trading other people's picks. This is about building it as a career. The only time it'll be a long-time career, the only way to be a long-term career is if you build a trading system that has a solid edge that you manage with discipline, and you grow your mindset at the same time. Those two things go hand in hand. You can't up level one without the other. So that's always my message is, you know, focus on that mindset, have a system and an edge. And at the end of the day, the only way to get true success is experience with time. There's no magic pill.
Yeah.
And I believe in you guys.
Oh, awesome. Thank you so much. And one thing I'll say there, when you said, they say with athletes as well, you know, if the media is saying you're amazing, you're never as good as they say you are. Or if they're saying you're horrible, you're never as bad as they say you are. You know, that I don't know if you've heard that before.
Yeah, I have, right? It's the highs and the lows that we said.
Yeah.
Suppress the highs and boost your lows, because at the end of the day, like, nobody cares about you as much as you do. And I think emotional management is really important. I think it's bad to be really sad, but I also think it's equally bad to be extremely excited about something. You know what I mean? Like, always kind of manage the emotions no matter where you're at. You don't want to go for a roller coaster. You want to keep it consistent and streamlined. And yeah, I love that. I would be of the exact same opinion. When traders in a room are like, oh, you're crushing it today, I'm like, guys, relax. There's guys out there making, 10, 15 mil. We're never the best. We're never the worst. Let's just be yourself.
You know, it's great. So, George, thanks again. If anyone wanted to listen to more to the stuff that you do or get in contact with you, what would be the best way?
Well, since we're on a podcast, we have one as well. It's called Mind Over Markets. I think that's probably the biggest gem there I could offer your listeners. There's research that shows no one listens to one podcast, like 5 or 6 is usually the average. What we talk about is trading psychology. So that psychology piece kind of beat to death throughout this show. We go into it, but like we put it into fragments and we explore it by topic. And so we just focus on the trading psychology aspect. You're not going to learn strategies, when to buy and when to sell, but you will learn how to improve the operator so he's capable of handling a big machine. So the podcast is one thing, and then the other place would be on YouTube. Our channel is TradePro Academy. Every single morning at 9 a.m., I'll actually go live on YouTube and share an update of the upcoming day, some levels, news, things to watch for. And yeah, those are two resources that I think you guys will find valuable.
Yeah, perfect. And I think that would be 2 p.m. UK time as well.
2 p.m. UK. Yeah, perfect.
Yeah,
you guys have the most interesting time to day trade. I would get in so much trouble. I'm Bulgarian, and when I visit Bulgaria, I fall in the trap of going out late because I know I can wake up later.
Yeah.
That you trade in the afternoon, but there's a lot of things to trade in London as well, in UK.
Yeah, it's almost too good because you can get the European and then the US Open, and then as well you can almost sneak in the Asian Open as well if you wanted to. So
I couldn't handle that. My head would explode.
No, I'm the same. But yeah, George, thanks again for the interview.
All right, Anthony, thank you for having me on. It was a pleasure. And yeah, hope you guys enjoyed and have a great day.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.